Hello guys, I'm alive. Can you see me? I'm really hoping that you guys can see me and hear me. Give me a confirmation on the live chat that you can see me and hear me, and I'll take you forward from there. Hello guys, am I alive? Can you see me? Oh yeah. Just checking if the live chat will be visible to me as in when I go ahead. A very good afternoon to all of you people, and I heartily welcome all of you to this beautiful session on CA Foundation Principles and Practice of Accounting Bank Reconciliation Statement chapter. We had discussed this. We had a session on this yesterday as well. If you guys had joined me yesterday, if not, you can watch that yesterday's video. It's on the same profile of Unacademy. You can find the link in the same very channel, and then you can watch it. So we did introduction to bank reconciliation statement yesterday, and we are taking it ahead from where we left in yesterday's session. So are all of you ready to discuss the later part of bank reconciliation statement chapter after that? One moment, let me turn on the fan. It's become a little hot up here, and the device will stop working if it becomes really hot after that. Fantastic. So before we go any further ahead, I have a small announcement to make for all of you people. So CA Iconic program is the flagship program of Unacademy that's been announced, and it's available for all the CA Foundation aspirants. You can take up the Unacademy subscription for Iconic program and then avail beautiful benefits that you get over and above the normal plus benefits. So in normal plus class, as you all know, you get live classes, you get weekly tests, you get study material, you get unlimited access, you get structured courses. But the study material what we spoke about would be in the soft copy and normal plus subscription. If in case you take up an Unacademy Iconic subscription, you get the hard copy of the material that you use in the class, that we usually use in the class, and you get to meet the educator one-to-one online for all your doubt solving, and you also can get mentored by the specified mentor who's allocated to you for your benefit, and industry experts will take sessions at regular intervals. You get to be part of a discussion channel on Nord, and all this will make your learning way more enthusiastic and amazing. And at any point of time, whenever you want to evaluate your preparations and then take up a test, usually you take up a test and then you get to know the marks only. But if you take up Iconic subscription, your tests whatever you take will be evaluated, and you will be told as to where can you improve, what was wrong, and all of these sessions will be given to you in the personalized way. So what are you waiting for? Take up Unacademy subscription for Iconic at a cost of only 58,000 for 24 months, at the cost of 35,000 for 12 months, and at the cost of 25,000 for 6 months. If in case you are planning to write your CA Foundation examination this May, we have an amazing batch that started on December 22nd, which I'll be showing it to you a little later after this presentation, for which if you can take up a 6-month subscription, that is by paying the cost of 25,000, you get to finish entire CA Foundation syllabus comprehensively, write your CA Foundation examination in the month of May, and also clear the same. All you need to do when you use this particular, or to say, take up this particular subscription, is use the code Yeshas, which is YESHAS, and you will avail 10% off on the price that you see here on the screen right now. Yeah, and right now, today being the last day, there's an amazing offer that's running for democratizing the education in the country, marking the Republic Day celebrations. So the offer is about 6 months extension. Whatever the period that you take for 12 months and above, if in case you take a 12-month subscription, you will get 18 months of view time. If you take a 24-month subscription, you get 30 months of view time. All this is possible if you take up your subscription today. That's the last day. 27th is the last day. Should have taken it on 25th, 26th or 27th. Today being the last day, use this offer to the maximum. Use the code Yeshas Live, YESHASLIVE, and then you can avail the offer of 6 months extra. And amazing combat is also happening for CA Intermediate on 30th of January at 12 p.m. You can grab amazing gift vouchers, like you can get vouchers from Amazon. You can get JBL speakers, or you can even win Apple iPad, or you can win scholarship up to rupees 1 crore on Unacademy. So use this to the core. If you are a CA inter student, join in on Unacademy Combat. That's happening on 30th of January at 12 p.m. and use the code Yeshas Live when you enroll, and this is free, completely free to enroll and then pick up this particular course. And I was talking to people about the batch that we've started on Unacademy for CA Foundation. So this batch is Step Up with Yeshas batch, which is 100% English comprehensive batch for May 2022. The batch started on 22nd of December, but only law, echo and little bit of math is done, and accounts has not yet been started. We will be starting with the syllabus of accounts in the month of February. Entire syllabus will be finished in the first week or so for the month of April, so that you will be ready, and then you will be able to take up few fast track revision classes, quick revision classes, marathon revision sessions, take up mock tests and other things, and then write your examination in the month of May. So if you join, take up this batch, you get to learn from me. I teach you entire CA Foundation principles and practice of accounting. You get to learn entire mathematics, statistics and logical reasoning from Anil Mishra sir. Shandar Ahmad sir will be helping you with your economics and BCK. Nitika ma'am will help you with law, and Pooja Chatwani ma'am will be helping you with BCR. So what are you waiting for? Take up your Unacademy subscription today. You know the benefits. You get live interactive classes and recorded backup of all the sessions will be made available to you. You get to learn from multiple educators just with one single subscription. Every fourth session of ours on Unacademy will be a doubt solving session, and our study material is in sync with ICA material, and practice and mock tests will be conducted at regular intervals to help you people get an edge in do well in the examination that you've been preparing for. Got it? So fantastic, guys. So that's the news, and let us quickly get started with the topic of bank reconciliation statement. Shall we? There's a lot of other information available with regard to how did it work with regard to iconic loan, which I've already run you through. Okay. So we were discussing the topic of bank reconciliation statement yesterday. Yesterday in the class, I did answer this question as to what is bank reconciliation statement. Bank reconciliation statement is a statement and it is not an account. Did we answer that? We did. And then the next question that we had was, why exactly is bank reconciliation statement prepared? I told you that we prepare BRS to reconcile. That is, know the reason for difference between balance as per cash book and passbook. When we spoke about differences, we analyzed the differences in detail, and I told you what can be the reasons for difference between balance as per passbook and cash book. What can be the reasons for difference? The reasons for difference between balance as per cash book and passbook can be the time period at which they see. Number one, if the checks have been issued but not deposited, or checks have been issued and deposited but not cleared, this is the reason for difference. Or checks have been received but not deposited, or checks received have been deposited but not yet been cleared. That was the second reason for difference. The third reason that we discussed was the direct deposit that the customer makes into the bank account. And then the fourth reason was payments made by the bank on standing instructions, or receipts collected by the banker on standing instructions. Or follow-up for all of these services, if in case the banker charges you any money as bank charges, and if it is recorded only in the passbook, that's another reason for difference. And then comes the reason being like bank interest credited in passbook only. If there is any interest in the bank account that is credited in the passbook only but not added in the cash book, that's again reason for difference. If there is any errors in cash book, that will also lead to difference. Or if there is any errors in passbook, that will also be another reason for difference. These, my friends, are the reasons for difference between passbook and cash book. Then the next point is, when is BRS prepared? Yeah, many of them say that the BRS needs to be prepared annually, BRS needs to be prepared monthly or daily basis. What we need to remember is BRS can be prepared at the discretion of the entity. So it is a management discretion as to how often do they want to prepare BRS. BRS can be either prepared on weekly basis, monthly basis, quarterly basis, half yearly basis or annually. But it is mandatory that you prepare BRS every year before you go down to prepare your financial statements. So it is mandatory to prepare it before balance sheet date. But at other times, it is at your discretion. You can prepare it any number of times a year, depending upon the scale of operations that you work in. Yep. After the question, when is BRS prepared? The next question that we have is, which balance is to be shown in BRS? Yeah. Should we be showing the balance as per cash book, or should we be showing the balance as per passbook? The answer to which is something very, very simple. Yeah. The answer to which is something very simple. Yeah, we should neither be showing balances per cash book, nor should we be showing balances per passbook. we should show the balance as per amended cash book. We should be showing the balance as per amended cash book. Now, what exactly is balance as per amended cash book? Balance as per amended cash book is the balance as per cash book plus or minus non-timing differences. Plus or minus non-timing differences. Once we add or deduct all the non-timing differences, that is how, or that is when we arrive. That is when we arrive at balance as per amended cash book. So we need to understand as to what are non-timing differences and what are timing differences. So for which I basically told you in yesterday's session only that difference between passbook and cash book, if it can get saturated over a period of time, if it can be cured by time, that is what we call as timing difference, which cannot be cured by time. Those differences which will not get adjusted simply based on time are something that we call as non-time or other than timing differences. Yes. So in other words, in simple terms, it is errors in cash book. It can either be an error of say principal, or it can be an error of commission, error of omission, or any of these, or compensating error also. You might be wondering, why is this guy running so fast? What we're doing today is a quick revision of what we discussed yesterday. Yesterday, entire 1 hour we've done all of this, and now what I'm doing is a quick revision of what we did yesterday before I start with problem solving in today's class. We classified the differences into categories. So I told you that checks issued but not deposited, or checks deposited but not cleared will get cleared just based on time. We don't really have to do much about it, and this, my friends, is a timing difference. Then we went on to see checks received but not deposited, or checks received and deposited but not cleared are again timing differences, because this will also get cleared by time and we don't really have to do anything superficial. If there is any direct deposit by customer into bank account, for this the entry is there in the passbook, but the entry is not made in the cash book and we have to enter it in the cash book. If in case we don't enter this particular transaction in the cash book, the difference is going to stay there for long. And this is a direct deposit. This is a timing difference. Sorry, this is a non-timing difference which requires adjustment. This is like an error of complete omission in cash book. Next one is payments made by banker. This again has been entered in the passbook but not entered in the cash book. Until and unless you record this in the cash book, the difference will exist. So this, my friends, again is a non-timing difference. And after this, we have receipts collected by the banker on behalf of the account holder, which has been entered in the passbook but not entered in the cash book. As this has been entered in the passbook, it has to be entered in the cash book. We can easily call this as error of omission in the cash book, and we have to take necessary action. This is not because of time, this is clearly because of our error of omission. This is a non-timing difference. Then we have bank charges recorded in passbook only. This is again error in cash book, because bank charges have to be recorded in both the places. Here the entry is made in the passbook but we have not entered in cash book. Because we have not entered in cash book, this becomes our error and we have to rectify the same. And until and unless we rectify this error in our cash book, there will always be difference. So this is a non-timing difference. Similar is the case with regard to bank interest credited in passbook only. Bank interest is our income. We have to enter it in cash book and post it to P&L. If you have not entered it in the cash book and the entry is made only in the passbook, there will be difference, and this difference is because of our error of omission. So there is error in cash book and you have to rectify, and this is a non-timing difference. And after this comes up our error in cash book. So if there are errors in cash book, obviously the name itself says no, it's errors in cash book. These have to be rectified. These are non-timing differences. And if there are errors in passbook, we can't go down to passbook and then make the changes. So these will remain to be timing differences. So this is what we discussed in yesterday's session. So are you all ready to go ahead, take an example problem on the topic of BRS and then solve? Are you all ready? Give me a yes. I hope you guys are giving a yes, which I don't really see. Yes, this is closed. Come on, let's quickly get started. I have a little sore throat and cough, so I might have to drink a little water. Please don't mind. Come on, let us quickly start solving a beautiful problem on this topic of BRS. Let me write some data. As on 31st of March 2022, bank balance as per cash book was rupees 1 lakh. Yeah, following differences were found between cash book and passbook. So what is it that we've been required to do? So they'll give the differences and then the question will tell what is it. I'm making a customized question exclusively for you people. Yeah, let me tell. Checks issued but not clear. Is rupees 10,000. To the extent of 10,000 checks have been issued by us, but these checks have not yet been cleared. Then we'll go for another difference. Checks received and deposited but not cleared. Rupees 15,000. Then let's take example number, third adjustment. I'll say direct deposit by customer 3,000. Direct deposit by customer to bank account rupees 3,000. Rupees 3,000 was directly deposited by our customer into our bank account and we are not even aware of the same. Banker paid rupees 2,000 for, what to say, shall we say insurance premium? Insurance premium based on standing instructions given. We had given instructions to the banker. We had given standing instructions to the banker, please pay my insurance bill on my behalf. And the insurance premium has been paid by the banker to the extent of 2,000 rupees. Done? So then after this we have, I'll make this more comprehensive. We'll add in as many adjustments as possible. And then for the same problem, we'll do it like with multiple cases. We'll do it like a simple BRS. And then we'll try and analyze what are the errors in this. And then we'll analyze this into timing and non-timing differences. Yeah, we'll do all of that. Okay, guys. Then we'll write bank charges or banker collected rupees 100 as dividend on our behalf. Yeah, banker has collected rupees 100 on our behalf and no entry for this is made in cash book. And no entry is made in cash book. Against this, entry is not made in the cash book. Banker paid 2,000 for insurance premium, instructions given, and entered in passbook only. Okay, then we'll write bank charges. Bank charges rupees 200. 200. You want 200 or let's make it 150. 150 was recorded in passbook only. Last, okay, G adjustment. Banker has credited interest of rupees. How much interest do we take? 250. Yeah, banker has credited interest of rupees 250 in passbook. No entry was made in cash. So these are the differences that we have. Now, let me frame the first question on this. First question that I'm going to frame on this is determine balance as per passbook. That is not the objective with which we prepare BRS. But in this question, I'm asking you guys, determine the balance as per passbook. Can we determine the balance as per passbook? Okay, question number 1 on this. Determine the balance as per passbook and also prepare what? By preparation of BRS. By preparing a bank reconciliation statement. So now, are you guys ready? Shall I prepare a bank reconciliation statement? Come on, let me prepare a bank reconciliation statement. So, bank reconciliation statement. That's what we're trying to prepare. So, what do we have? We have balance as per cash book to start with. I will write column headings, particulars. This is as on 31st of March 2022. Here I will write amount rupees. Yeah. So what is the balance as per cash book as on 31st of March 2022? It is 1 lakh. Give me a moment. I'll quickly draw a box for this. Yeah, the format is ready. So there are few add items, few less items. Let us see each of the items and then add them or less them as the case may be. Yeah, to start with, the first one. Checks have been issued but not cleared, 10,000 rupees. When the checks have been issued, what happens? Whenever you issue the check, you make the entry in your books. So when you make the entry, your balance as per cash book will decrease. See, this represents my cash book and this represents my passbook. I repeat, this is my cash book and this is my passbook. Got it, guys? Okay. I issue a check. What do? I issue a check. When I issue a check, my balance as per cash book would reduce. And the entry is not made in the passbook, so balance as per passbook has not reduced. I repeat, balance as per cash book has reduced, balance as per passbook has not reduced. When my balance as per cash book has reduced and balance as per passbook was not reduced, so is there a difference? Yes, there is a difference. All you guys need to do now is try and understand where can we make changes or what is in my control. I have started with balance as per cash book. My starting point is balance as per cash book. My starting point is balance as per cash book. So what I know is balance as per cash book. So I can change only what I know. What I don't know, I can't change. How can you change something that you don't know? Quite obvious, isn't it? So when a check has been issued, balance as per cash book has reduced, but balance as per passbook has not. Can you see the P? No, you cannot see the P. In order to see the P, either you would have to P down or you'd have to C up. I repeat, either you'd have to P down or you'd have to C up. What's in your control? C. What's in your control? C. Cash book is something that's in your control. So what do we do in the cash book? We increase the balance as per cash book. We increase the balance as per cash book. We add. We add. So that's what we are supposed to do. Come on, let us add. So this is an add item. A. Checks issued but not cleared. What is the amount? Amount is 10,000. Come on, let us now go to the second adjustment. First adjustment is done. We are done with our first adjustment. Now we are doing our second adjustment. Checks received and deposited but not cleared. We have received certain checks and we have deposited these checks. But this has, oh, Dashwant is here. Hi Dashwant, how are you? Yeah. Certain checks have been received and deposited, but these have not yet been cleared. So what's happening here? Checks have been received and you keep it in the bank, but it's not cleared. So you don't have to do anything. You just have to see to it as to why have they not yet cleared. It's not an error to be rectified, but it is a reconciliation item. Yeah. So check has been received. When you receive it, you would have made the entry because of which your balances per cash book would have increased. But the check is not yet cleared by the banker. The day the banker clears the check, you would increase my balances per passbook. The day the banker clears the check, the balances per passbook would increase, but the check is received, so cash book balances increase. Is there a difference? Yes, there is a clear difference. Can you see the P? No, you cannot see the P. In order to see the P, either you would have to P up or you would have to C down. I'll repeat, either you would have to P up or you would have to C down. What's in your control? What's in your control? What's in your control is C. Cash book. That's our starting point. So what do? We would have to deduct. Less. It's a less item. It is a less item. So I will write it as a less item. Checks received and deposited but not cleared 15,000. Checks received and deposited but not cleared 15,000, and this has to be deducted. I hope you guys understood. Oh, Dashwant is asking, how am I? I am fantastic. The throat is little itchy and eyes are little sleepy because of long hour classes. Otherwise, I am fantastic, man. Feeling great as well, Dashwant. And good luck with your results, Dashwant. Waiting for your good news. Yeah. And my prayers are with you. Come on, we're done with the second one. Let's go to C. What do we have in C? Direct deposit by customer into bank account. This is rupees 3,000. So what has happened? Our customer has gone to bank and directly deposited the money that he should pay us in our bank account. So when our customer directly deposits the money that he should give us in the bank, what happens? Our bank balance increases. Cash book or passbook? Entry is made in the passbook. Banker knows. I don't know that he has paid. So balances per passbook would increase, but balances per cash book would not increase. Let me repeat. Balances per passbook would increase, but balances per cash book would not increase. As the balance per passbook is increased and cash book is not increased, there is obvious difference. We should make changes where either bring the passbook down or cash book up. What's in our control? We're starting with cash book. Cash book is our starting point. We can make changes in the cash book only. We would have to increase the balance as per cash book. So it's an add item. Got it? So the third one is an add item. We need to add direct deposit by customer into bank account. Direct deposit by customer into bank. How much is that? C is 3,000. Yup. Then let's go to fourth one or D. Shall we go to D? Everyone understood? If you have any doubt, you can use the live chat. You can share the doubt that you have across to me. I'll definitely be happy to help you with your doubt. Okay. Next one. There is banker has paid 2,000 rupees for insurance premium based on standing instructions given and entered it in passbook only. This is what is done on our behalf. So banker has paid 2000 rupees on our behalf. So when banker has paid 2000 rupees on our behalf, banker would decrease it from our balance as per passbook. But the entry is not made in our cash book. So our balance as per passbook is reduced, but the balance as per cash book is not reduced. Can you see the P? No, you cannot see the P. The balance per passbook has gone down, but the cash book is not. Where are we making changes? We are making changes in cash book. So what do? We cannot increase the passbook, so we would have to decrease the balance as per cash book. I'll repeat, we would have to decrease the balance as per cash book. Yes. So what is this? Insurance premium paid by banker on standing instructions. On standing instructions. How much is the amount for adjustment D? It is rupees 2000. Very good. It's a less item. Come on, let's go to item E. What's with item E? Banker collected rupees 100 as dividend on our behalf and no entry is made in the cash book in this regard. So what has happened? We have some investments in some company in the form of shares against which we have been we are eligible to collect dividend, and dividend is to be paid by the banker, by the company to us, but we have delegated the work to our banker and banker has collected the dividend on our behalf. When the banker collects the dividend on our behalf, what happens? Banker makes the entry in the passbook, because of which our balance as per passbook would increase. Our balance per passbook would increase, but the entry is not made in the cash book. So cash book balance is not increased. So the balance as per passbook has increased, balance as per cash book has not increased. Where are we making changes? We are making changes in the cash book. Yeah, we would have to increase our balance as per cash book by adding the same. Am I right? So this is an add item. I will write that this has to be added. What is it? Dividend collected by the banker. Dividend collected by bank. What is the amount? Dividend collected by the banker is rupees 100. I hope you understood till here, till adjustment E. Shall we now do F and G? Come on. Let us do our adjustment F and adjustment G. Adjustment F. Bank charges of rupees 150 were recorded in passbook only. So there is rupees 150 bank charges which is recorded in passbook. So when this 150 rupees is recorded in passbook, our balance as per passbook would decrease. But the balance as per cash book is not moved. You might be wondering why did it do? Because the entry was not made in cash book. Sir, why did they not do? Maybe because you are not aware of the fact that bank charges are detected by the banker in the passbook. So there would be difference. So bank charges have been entered in the passbook, because of which balance as per passbook has decreased, but the entry is not made in the cash book and the balance as per cash book is not decreased. So where are we making changes? We need to make changes in the cash book. We need to make changes in the cash book. So when we are making changes in the cash book, we would decrease the balance as per cash book. We would decrease the balance as per cash book to match it. So it's a less item. This F is a less item. Bank charges debited in passbook only. What is this F? 150. As I mentioned, this is a less item. Got it? Okay, fantastic. Come on, let us go to next G. What do we have with regard to our adjustment G? It is bank who has credited us interest of rupees 250 in the passbook and no entry was made in this regard in cash book. So congratulations, you received bank interest. So banker is giving you interest of rupees 250. When the banker gives you interest of rupees 250, your balance as per passbook has increased because banker has given you interest. But your cash book has not changed because you have not made any entry in the cash book. So because the interest is given by the banker, balance as per passbook has increased, balance as per cash book has not increased. Where are we making changes? We are making changes in the cash book. If you are making changes in the passbook, we would have deducted. Because we are making changes in the cash book, we would have to add this particular item. So this last item G is an add item. Interest credited in passbook only. Very good. Interest credited in passbook only. How much is the amount? This is to the extent of 250. I would write 250 here. That's it. Fantastic. All the adjustments have been done. Let's quickly take a simple calculator, use simple calculations to find balance as per passbook. Whatever we do, we need to do it very neatly, cleanly. So that is the intention behind which I am writing this very cleanly here. Yup. Come on guys, let us take a calculator and then sum these up. 1 lakh is the balance as per cash book. To this I'll add 10,000, that is checks issued but not cleared. Okay, and I would deduct 15,000, that is for checks received and deposited but not cleared. I would add 3,000 rupees towards the direct deposit made by customer. I would deduct 2,000 rupees, that is towards the insurance premium paid by the banker on standing instructions. I would add 100 rupees, that is dividend collected by the banker, and whatever is bank charges debited in passbook only, I would deduct this 150 rupees and I would add interest of 250 rupees, that is credited in passbook only, which should have been recorded. I would arrive at the bank passbook balance as 96,200. So 96,200 rupees is my balance as per passbook. I hope all of you got this. Anybody having any doubt can feel free to ask me. I am here to answer your doubts. I'll take a small sip of water. Meanwhile, you guys can answer. Ask me a question if you have. Any questions? Fine and fantastic. Let me take you ahead now. Now, for the same question, let me ask you another question. Determine balance as per cash book. Sir, but balance as per cash book is given. No, I'm just telling you. Determine balance as per cash book if, oh, I don't know, some weird name. I don't understand your comment. If you can tell it a little more clearly in another language, I will definitely reply to it. Yep. Determine the balance as per cash book if balance as per passbook. How much do we take? Tell me a figure. Can I take 80,000? 80,000 or 1 lakh only? We'll take 80,000. For the same question, if the starting point is balance as per passbook available and that is at 80,000 rupees, for these very adjustments, what would be the balance as per cash book? That is the question. Come on. This is the solution to case 1. Now, we will do solution to question number 2. Yeah, we are trying to prepare bank reconciliation statement. Same thing again. Bank reconciliation, or we'll do a thing. We'll take this 96,200 and try to arrive at 1 lakh. Let's see if it will work. Okay, was rupees 96,200. I have changed. I'm taking my balance as my passbook as 96,200 and we're trying to find the cash book balance. If it was not given in the question as 1 lakh, would we be able to find? Yeah, bank reconciliation statement as on 31st of March 2022. So I'll have here particulars and amount rupees. Shall I quickly draw the format and then we'll start with our answer. So we are all ready to solve second question that I gave to you. So the starting point is balance as per passbook 96,200 rupees. Okay, come on. Let us start with the first adjustment. Checks issued but not cleared. Checks have been issued but checks have been not cleared. When the checks were issued, balance as per cash book decreased. When the checks get cleared, balance as per passbook would decrease. But as of now, checks have been issued because of which cash book has decreased, but checks have been not cleared because of which passbook has not decreased. So you cannot see the P. Can you see the P? No, you cannot see the P. In order to see the P, either you would have to P down or you would have to C up. What's in your control? We're changing passbook right now. We're making changes in passbook only. So the balance as per passbook has to be decreased. Balance as per passbook has to be decreased. How do we decrease balance as per passbook? By deducting the same. So I'll write less. The first adjustment is a less item. Checks issued but not cleared. How much is the amount? Amount is 10,000. So let us go to the second item. Shall we go to the next adjustment? So we are done with the first one. Let us go to the second one. Checks received and deposited but not cleared. You have received the checks and you deposited them. Because you received the checks and you deposited them, balance as per cash book has increased. Because these checks have not yet been cleared, your balance as per passbook has not increased. When the checks were received and deposited, balance as per cash book has increased. When the checks get cleared, passbook would increase. Till then, passbook won't increase. Where are we making changes? We are making changes in passbook. So what do? We add. We add. How much do we add? 15,000 is the add item now. checks received but not deposited. Sorry, checks received but not cleared. We have deposited them, but these checks didn't get cleared. What is the amount? 15,000. The first item was a less item. Am I right? Yeah. Shall we now go to the third item? Come on, let us go to adjustment number 3 or adjustment C. Direct deposit by customer into bank account. Our customer has directly deposited money into our bank account. When the customer directly deposits the money into our bank account, our balance as per passbook has increased, but the balance as per cash book has not increased. I repeat, our balance as per passbook has increased, but our balance as per cash book has not increased. So as the passbook balance has increased and cash book has not increased, we are making changes in cash book. No, passbook. Because we are making changes in passbook, we have to deduct. It's a less item. Yeah. Direct deposit by customer into bank account is a less item. We are making changes in passbook in this case. You remember that. What is the amount direct deposit by customer into bank account? 3,000. I will deduct it. Let us now go to adjustment D. Banker paid rupees 2,000 for insurance premium based on the standing instructions given and entered it in passbook only. Yeah, banker has paid 2,000 rupees. When the banker paid 2,000 based on the standing instructions, banker would decrease our balances per passbook. Our balance per passbook has gone down, but the entry is not made in our cash book because we are not aware that the banker has already paid insurance premium 2,000. So bank balances per passbook has gone down, cash book has not. We are making changes in passbook. What should we do? Add. How much? 2,000 has to be added. 2,000 has to be added. This is adjustment D. Insurance premium paid on standing instructions 2,000. Based on the standing instructions that we gave to the banker. Yup, this is to the extent of rupees 3,000, isn't it? No. This amount B 2,000. Okay, then we'll have adjustment E coming up. Come on, let us do adjustment E. We are now trying to do adjustment E. Banker collected rupees 100 as dividend on our behalf and entry is made in cash book. Banker has collected rupees 100 on our behalf. We were supposed to collect and banker has collected it. When banker collected this 100 rupees on our behalf, we would make the entry in the passbook. So balances per passbook has increased because the banker has made this entry. But our balances per cash book has not increased. I repeat, balances per passbook has increased but the balances per cash book has not increased. Because the passbook balance has increased and cash book balance has not increased, there is difference. This difference can be made good by either decreasing the passbook or increasing the cash book. Where are we making changes? We are making changes in passbook. That is our starting point. So this is a less item. I would have to deduct this. Bank charges recorded in passbook only. Yeah. How much? Passbook is sorry. Bank charges has been recorded in passbook because of which passbook has gone down, cash book has not. We're making changes in passbook, we would have to add it. Sorry, we'd have to add 150. We did which one now? Oh, I think we were doing E, right? E. We'd have to do E. Sorry. E only. Banker has collected dividend, passbook has increased. We have not recorded in cash book, it is not increased. Changes in passbook, decrease, less. Sahi hai. E. I thought we were doing F. Dividend collected recorded in passbook only. How much is the amount? Dividend, the amount is 100. Now let's go to F. F is the next one. Come on. Last one? No. Last but one. Bank charges of rupees 150 recorded in passbook. Bank charges of 150 is recorded in passbook because of balances per passbook has gone down, but balances per cash book has not gone down. Because of the bank charges, balances per passbook has gone down, but balances per cash book has not gone down. Where are we making changes? We are making changes in passbook. What do we do? Add it back. Add how much? 150. Bank charges entered in passbook only. This is rupees 150. Am I right? Shall I now take you to the last adjustment? Adjustment number G. Let's go to adjustment number G. Banker has credited interest of rupees 250 in passbook. However, the no entry was made in the cash book. So banker has credited interest of 250. When the banker credited interest of 250, balance as per passbook has increased. But the entry is not made in the cash book has not increased. Where are we making changes? We are making changes in passbook. What do we have to do in passbook? The balance has to be decreased. How do we decrease the balance as per passbook? By deducting the same. As simple as that. We'll write interest recorded in passbook only, 250. What is the amount? It is 250 rupees. Now pray to the Almighty, take your calculator and then do the total. The answer should come down to be 1,96,200 minus 10,000 plus 15,000 minus 3,000 plus 2,000 minus 100 plus 150 minus 250. We get 1 lakh rupees. This would be balance as per cash book. I will very soon come up with another session on bank reconciliation statement wherein we'll try and discuss a little in detail as to how to analyze these differences into timing and non-timing, and what would be the treatment of timing differences and non-timing differences. How do you prepare amended cash book? What balance is to be shown in balance sheet? How to treat overdraft balance as per cash book, or how to treat overdraft in BRS. All of this I will definitely come back with another session on BRS very soon and then help you out. Whatever the session that you need, please do type in the comment section to this video. The description of this video contains a link to my profile on Unacademy. Follow me on Unacademy so that you get notification whenever I come live with any topic relating to CA Foundation, CA Inter, CS Executive and all other things. And it was really nice. It was my pleasure to come in here and then teach all of you people. I hope you guys liked it as well. Please do like, share and comment on this YouTube video of Unacademy, CA Foundation, Chartered English YouTube channel. And that's it. I hope you had a good time learning this. I really had a fantastic time teaching you all of this. My name is CA Rajavardhan. Please do search me and then follow me on Unacademy and every other place that you can find me on. That's it. Remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you guys are learning something, you're having fun, it's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay in the game. For one last time on this day, I have just one simple question for all of you people. Are we in the game? I hope the answer is yes, we are in the game. Bye. See you all very soon in another session on another topic. Till then, tata, bye-bye, and